The goods and service tax, the GST, it's like a Abbas Mastan movie, where every time you think that we've had the last twist and turns, there is another. So you had the finance minister Arun Jaitley, who attended, it's another first we are told, the finance minister flying down to Kolkata to attend the meeting of the empowered group of state ministers, state finance ministers on GST. And after that, he proclaimed so confidently that we are there with the GST. All states are on board. And after that, we read today in the newspapers that Tamil Nadu has expressed its reservations, and Ms. Jayalalitha, the Chief Minister of Tamil Nadu, has presented apparently some 29 pages of demands on GST is what the Indian Express says. Some of us will like to get a copy of those 29 pages, but that's what GST is all about. It keeps us glued to our seats every day. There is some action or the other on the GST. One day we feel we have almost crossed the Rubicon. Another day we feel, oh, yet so near, yet so far. I just wonder at times whether GST bill was first introduced or conceived during Rahu Kalam. PVS sir and Sridhar sir will talk more about that. But let's get to what the finance minister actually said yesterday evening after the meeting. He said that there is complete consensus on the fact that there should be no constitutional cap on the GST rate because contingencies might arise in future as far as the quantum of taxation fixed by the GST Council is concerned. Then he went on to say there is, however, no deadline on GST implementation. But we can say that a broad consensus on its implementation has been achieved and we are moving with the positive intent. And this is very important on the dates, on what are the potential dates and timelines we are looking at. He said it will be essential for the constitutional amendment bill to be passed in the monsoon session. The passage of this bill will have to be followed by ratification of the bill by a majority of states. After this, the central GST and integrated GST legislations will have to be passed by Parliament and state GST laws by states by the end of the year. And you're going to have another meeting of the empowered group of finance ministers to decide, or in fact to make a presentation on the possible revenue neutral rate calculations. It's the government officers who are going to make that presentation on what ought to be the revenue neutral rate. And finally, the finance minister says, since the administration of state and central taxes will merge into one, there is need to bring about a seamless system. It should not lead to conflict, and the process should work out harmoniously between the center and the state. And finally, the Indian Express says a decision is also expected on sorting out the dual control issue after presentations by tax experts. What Tamil Nadu said, what Punjab said, reservations of Tamil Nadu we'll come to later. For now, we are joined by four of the most renowned tax experts in the country, four indirect tax stalwarts, I should say. Gautam Doshi of Reliance Group, Rohan Shah of Economic Laws Practice, R.Sridhar, tax head of Coca-Cola, and P.V. Srinivasan, corporate advisor and former Wipro tax head. Thank you so much, sirs, for joining. PVS, I'm going to ask you the most difficult job of the day, next 40 minutes, is to summarize the model GST law that we came up yesterday, that we were all given last evening. That model GST law of 200 pages, sir. If you could summarize for all our audience in the next 3 to 4 minutes, sir. And I'm really sorry for being so harsh on you.
No, I think since we have been reading the model law for the last about 8-9 hours at least, what I can say is there are 5 or 6 high-level points which I'll mention. Then possibly we will look forward to a little amount of deeper insight from other participants. What I see is that, number one, the threshold exemption limit for a taxable person is rather low. It's prescribed at 10 lakhs generally and half of it for the northeastern states. I look at it as a low threshold also means that the R&R is a compulsion. A high threshold means R&R has to go up. A low threshold means R&R can be kept low. So having regard to R&R, possibly a low threshold has been kept. Number two is that a positive aspect of this is that there is a reasonable clarity. I don't want to go into exactness. There's a reasonable clarity of classification between goods and services. This is important because the levy depends on place of supply, which are different for goods and is different for services. There were intense disputes at various courts and states about classification under the earlier indirect tax regime, but I think GST has taken it head on and tried to clarify as to what would constitute goods and what would constitute service. The third one, which is a matter of concern, is about transitional provisions. While there is an assurance that available credits will be carried forward, we do not know what will happen. Possibly, say, in case a refund is denied, then it will be flowing into credit or it will get lapsed. I think these are the concerns which are there in many of the industry players. The fourth one is dual control. While the finance minister said that that's yet to be addressed, the model law clearly is on the premise of dual control. And even the first appellate authority, it looks, is of dual control, is a continuation of dual control.
Sorry to interrupt you, sir, but for the uninitiated, could you just explain what is dual control?
Dual control means the way the law is positioned, it is a levy. The levy is on the value of goods and services. Currently, goods are liable to be taxed only by certain events. For example, manufacture is liable to excise duty. The levy of sale is liable to VAT and CST, while services are liable to tax by service tax by the union alone. What the GST proposes is that states will have a power to tax services, and the central government will have, or the union will have, the power to tax goods up to the point of retail consumption. So dual control means both the center and the states will have the power to tax the same transaction up to the point of consumption. So being a destination tax, it will carry up to the point of consumption. Of course, it will be taxed at a value-added stage, as with credits being available for the earlier stage of taxation. That is the way the dual. That means both the state authorities and the central authorities would exercise control by way of assessment, audit, inspection, scrutiny, and so on and so forth.
Sure, sir.
And of course, the returns will be filed at 2 levels, and that's how the dual control would work. Then there is a tight mechanism for input tax credit availment. The revenue is fully protected, and there is no scope for revenue loss. Is the way on account of input tax credit, there should not be any loss. Is the concern of the GST model GST law. So it has been so tightly worded that the industry may be the sufferer of such a tight law. There are certain suggestions. The e-commerce taxation, which is possibly a growing segment at this point in time. There are certain concerns that the marketplace models may require tax collection at source when they are making payments to the suppliers. This has come as some kind of a eyesore or maybe a difficult administrative aspect for the e-commerce players. I think these are the headline points which I thought I will mention. That could be many more as we go.
Can I go to Sridhar sir? Sridhar sir, I would like you to take up the things that are missing in this model law. I think that is something we wanted to talk about, and then we'll go to Gautam and Rohan for the initial reaction.
No, but I would like to talk about something which is there, which I think somebody like Rohan and Doshi ji would really, perhaps Gautam would really agree. For the first time, you will find in the context of what the industry has been demanding for so many years, the concept of business has been put in the input tax credit definition, and we have gone away from nexus. I think this is a very red letter day as far as India is concerned. We should at least have perhaps two large glasses of beer to celebrate this. I think that is the first one, and the second, as far as the misses, I won't say that I wouldn't take it as misses, but I would like to touch upon a very important point which I had talked to Gautam a few minutes before personally, with regard to the area-based exemptions and the industrial incentives in the states that are linked through reimbursement of VAT to the extent of 25% and 50%. There is not even a whimper in this existing draft. So the way they want this to be done is, people will put in the suggestions to the council. The council will deliberate on what possible grandfathering, fathering, whatever you like to call it, ultimately, and then a proposition would in turn be dropped. That is the first point I would like to say. Now, second thing is, since I come from FMCG, and Rohan would definitely empathize with this point, is effective 1996 till 2016. Let's assume on 1st April 2017 we have a GST law. nobody in the FMCG ever even dreamt about a transaction value, because we were paying tax on MRP at the CGST level, which is the equivalent central excise duty. Now you are moving the clock back from MRP to transaction value. And added to that, already all the propositions which was hitherto fought out of those elemental years prior to 1996, unless some maturity is exhibited, will come back. And I don't have to tell you, somebody like Rohan is the best person to tell you the number of product groups that were shifted to MRP based tax. And for example, I can give you one straight example inside the valuation provision. The question is on subsidies. If you see the provision, I think under 15 or 16, it very clearly says subsidy should be added to the transaction value. Let's assume that there was an FMCG company producing something called a food product sitting in Northeast. And let's say for this purpose, he was producing the entire product in Northeast and exempted through the relevant notifications. He was selling his goods at MRP. Even though there was a circular issued, then what happened was they said that no, it will not affect people who are on MRP. Such is the extent now under the new law, you will have to add back.
Sure. Sure, sir.
These are all some major ones.
Sure. Sure. Rohan Bhai, Gautam Bhai, who would want to go first? Please. Rohan Bhai?
Yeah, sure. So, first let me take up what Sridhar mentioned as being something that should be lauded, which is that in the context of the input credits, the concept has now moved to take in what you actually require and whatever is required in the furtherance of business. So the older tests in terms of the factor of nexus effectively go. You are restored back to the whole sense of business. But most importantly, you are in a way restored back to the 1989 judgments of the Supreme Court in East End paper and in Ballarpur Industries, which said that anything that a businessman rationally uses for his business should effectively be available as a credit. And if that happens, then A, the sense of facilitation would be complete in terms of the credit mechanism, and B, the situation would then sort of effectively be that not only is it more robust as a mechanism, but the scope for differences and the scope for litigation in some form or manner is reduced. Coming to this whole situation of MRP and what this law is now become, I think on valuation, a few things which are worth mentioning. One, qua services, you are now pegged to a transaction value, and concepts including a related parties concept and an arm's length concept comes in. And in the context of goods, we used to have that in excise. But in the context of services, now you go to transaction value as opposed to the gross receipt basis, and you get into the related party definitions which become applicable, and you get into the whole arm's length basis. In addition, the fact that the MRP based valuation provision is missing, although we did have some credence for it in the earlier round of what was the credible or not credible formulation which was doing the round. But the MRP based valuation missing, to my mind, really sets back a whole line of what you set out as a legislative framework. And in this transition, to set back that whole legislative framework, I think is one thing which is certainly not desirable. Okay. On valuation, you're also seeing, just give me a minute, that subsidies are includable. Discounts, which were contentious, including in the Fiat case, if it's a pre-supply, you will now get the benefit, but if it's a post-supply, then you will have to prove that it was pre-agreed, and you will in a way have to show that it was passed on, almost like what the Supreme Court said in Kelvinator. And lastly, reimbursals are included in the assessable value, other than if there is a pure agent situation. So while the spread of these 200 pages is large, just focusing on this valuation and focusing on the input credit, I think these are some of the comment-worthy features. I'm sure Gautam Bhai has comments.
Gautam Bhai, just a quick clarification before getting your comment. Business, when you talk about the credit, and we say business, does it mean a company or a group?
Sorry, I couldn't get the last part. I mean, there was some.
Yeah. Gautam Bhai, in the context of input tax credit, does business here mean a company or a group?
I would presume it is the business of the entity and therefore business of the company. Okay. It is not the business of the.
Yeah.
Is what it would appear. Normally, business should mean business of the entity.
Sure.
Yeah.
Therefore, all said and done, while this is a combination of VAT, service tax, and excise, really, I would not say there is anything new. And we didn't expect to see anything really new. Wherever you cannot combine the three, like in the context of valuation, you have a problem between transaction value applicable in VAT and MRP applicable in excise, and then you try and combine and you try and choose one out of them. But effectively, you are merely combining, and that's what is called for. I am not so sure that the input credit is going to be far more easier. I think the negatives are still in their minds. For example, they have still talked of motor vehicles and credit on motor vehicles as not being eligible. And therefore, I would assume that rules, as and when they come in, for attributing the inputs, may start again distinguishing between those inputs for which credit is not to be allowed. And if that happens, we will be back to square one. So the rule itself, or the law itself, may be very wide. The law will in turn get narrowed down by the rules as they come. The key issues are going to be issues relating to classification and valuation. Classification between goods and services beyond a point should not really matter if the place of supply rules are such that in most cases, whether you call it a good or a supply or a service, it should be the same. The question is whether the authorities will, in spite of this, be able to charge double GST on the same transaction by saying that this transaction is both a supply of goods and a supply of services, and therefore the same value is to be charged twice, once as goods, once as services. I don't think that can happen under a GST law, and if therefore it has to be only one out of the two, it shouldn't really matter which one they classify it as. Valuation is then the other key. Valuation seems to be reasonable when we talk of transaction value. The whole issue comes when you deal with the customs type of concept of related party, the similar goods valuation, the compounded the valuation based on computed value and things like that. Is that really applicable to a GST? Should it really come in? And to what extent it is going to create, again, complications? And that's something which we will really have to think through. The place of supply rules are going to be the key. As far as we are concerned, services in particular, I don't really see what extent they are going to add to the problems or subtract. Is, for example, a telecom supplier going to have to pay service tax in each state? And that's what it would look like. He would have to pay GST and register at a variety of places. And then in turn identify his supplies and divide them between them. And that's going to make a lot of changes in accounting systems and in the whole entire setup of systems and the information technology behind it. And that's going to be a Herculean task. But for that, we need more clarity, including...
Gautam, can I get your quick views, on the revenue neutral rate? I think that struck out as a little bit of a sore point, even within all the states, or among all the states who have agreed to back the GST, maybe 90% of them. But there doesn't seem to be a consensus on what should be that rate. Should it? Some are suggesting it should be 18, some 26. Gautam, by your take on it.
I think clearly it should be on the lower side, especially when the center has agreed to bear the loss. Then why should states really mind? They are compensated. They remain where they are. If the revenue neutral rate hurts them, they'll get it back from the center. If it does not hurt them, if it results in getting something more, that's great. It may come to something more only because of a major part of the economy which was not being charged or not being taxed now coming within the tax focus, either because of the lower threshold or because of the fact that more of the economy is now accounted than otherwise.
Yeah. Gautam.
So I will go for the lower rate, as I said.
Yeah. Sridhar sir, your take on the 1% interstate tax. Does it need to absolutely go? Congress has made it one of the 3 conditions, which the government has to meet if Congress is to back the bill. One of them is that this 1% interstate tax has to go. The corporate surely want it to go. But what needs to be done there? Sridhar sir.
Actually, even if you see the current definition, it's only on an interstate sale, not on account of when there is a transfer. So to the extent of the transfer, it is not there in the draft law.
Yeah.
So transfer between two branches of the same entity, which was the major concern of the industry before the Rajya Sabha committee, has been given effect in this draft itself.
Great. So now, okay, fine. Great. Excellent.
Unless Rohan, if he feels that no, is my understanding wrong, I think he can correct, because the way I have seen it, it is not there. It is only in respect of interstate supply where there is a consideration. So in between a branch transfer, there is no consideration.
Yeah, and I think you have to notice that also from the definition of supply, right?
Right,
The
yes.
definition of supply predominantly now is a definition correlated to the transactions of supply for a consideration. And therefore, earlier, all of what we had as the issues which were open and conjectural in terms of what happens to branch transfers, they've tried to effectively address that by bringing in the element of the for consideration. Yes, there is a schedule 1 which deals with transactions which are without consideration, but the predominant rule and the default rule which will cover all of this is that it must be a supply for consideration.
Okay. Previous, you said in your key takeaways in the beginning that the e-commerce, tax collection mechanism is sticking out like a, it's coming across a little. It's the sore point of the 200-page law. Could you just expand on that, previous, why and what needs to be done? What is the correction you would advise? Because e-commerce taxation worldwide today has become a very controversial issue, previous.
No, it need not be controversial. There are two views which are possible, and the government has pursued one of the two views, if I may say. One view is that they have a platform where there is a capability to verify the supplier, the customer to the last point. In the sense, it's the most transparent system because you know where the goods are originated, you know where the goods are ended, and therefore the ability to verify is possibly the best in the e-commerce scenario. So from that aspect, the e-commerce needs the maximum amount of concession, if I may say, more liberal than ordinary trade, because the controls which are required for ordinary trades are already prevalent in the e-commerce scenario. So from that angle, the claims of e-commerce that there should not be a TCS, I think that is the grievance they may hold even today. I think that's a very fair claim. The downside of it, if I may say, the government's looking at is that since you know everything, your systems are able to gather everybody, and you have a capability to touch base with all the vendors who have supplied goods to you. Why don't you deduct some small amount and send it to the government so that the ability to assess the dealers, which currently some of them are vanishing, is the allegation. I think that is the concern of the government which they are looking at. Both have a merit. But if I have to look at it, that occasional dealer who vanishes should not be the basis to set a yardstick for collection of tax, and therefore the government should take it as a information sharing should be insisted on. Whether tax also should be insisted on is the debate possibly we need to do.
Yeah. Previous, sir, you also wanted to talk a little bit on the potential litigation issues that might arise out of the model law. So.
The litigation, if I have to translate, it is between, actually there is no litigation on the levy itself. The litigation has to be which of the two states will have to get the revenue. That can be a matter of concern, and that would depend on the place of supply rules. No doubt the origin place will be fine, but assuming that if there are, particularly in service transactions, you do not know where the supply has taken place, who is the user of services. These are difficulties even in international transaction. At a subnational level, if I have to divide a single service into 29 states or even 37 taxable jurisdictions, then that is going to be a real challenge. Which of the states will claim revenue based on consumption? I think that is the real challenge which may emerge. And if that were to be a challenge, the automatic challenge is what will be the transaction value, how it will be valued.
Okay, Rohan bhai, and Gautam bhai, you have one of the leading tax consultants in the South, Mr. K. Vaidiswaran. He mentioned on social media, it's a combination of all existing tax laws. Sample this: for goods you pay tax on supply, or removal or invoice or receipt of payment, whichever is earlier. It's quite a sarcastic comment. Rohan bhai, is this, I mean, a more generic question. Is it going to be a much more difficult law to implement in? I think 10 years back when I first heard you talk about GST, when you were championing it, I think one of the points which found favor with you was that it will be simplified. You'll have a structure which will be reasonably uncomplicated. Are we somewhere compromising on that, Rohan bhai?
Since that period of time, I mean, two sets of things have happened, right? One is that the nature of transactions themselves have radically changed. And 10 years ago, neither you or I would have been engaged on sort of e-commerce because it didn't have the sort of impact it has today. So, to my mind, given the diversity of the things you're trying to deal with, in terms of different nature of transactions, legacy basis of taxation, including entrenched exemptions and credit issues, I don't think this could be such a simple law. And in the context of the fact that you have the various issues in terms of reconciling three sets of provisions, you have the issues of taxability, classification, input credit, valuation, entrenched exemption notifications, all there. I think this is a fair fist of things. They've done the best that they could. Could it be simpler than this? To my mind, yes, but you will need to effectively work on that. And could it have been more complex than this? Including, could it have had far more complexity on each of the issues we mentioned? That also the answer is yes. So to my mind, it is critical, if we want this to transition well, that it needs to be simpler. But credit to everyone who put it together, that it is at the stage at which it is. The other thing that you will have to be a little careful about is, the states, in terms of how we now write and read Article 246 of the Constitution for the purposes of GST, it's very, very critical that the states en masse accept this and implement it as their law without any changes, because the new scheme of the 246 in a way seems to give a predominance to the state over the center. So one, can we bring this together and simplify it? And second, can we get a universal adoption of all provisions by all states? And I think therein lies the challenge in terms of the sort of seamless and easy interpretation and administration that we need.
Sure. Gautam bhai, yes, please.
One issue with regard to this same thing that he said, Rohan had said. This is on this, if you take remission on supplies found deficient in quantity, there has been a specific provision sequel to the central excise remission they bought in. Now, but what happens to the extent which I felt was missing, you got discounts on one side, but the discounts are on incentives. What happens mostly, in the food industry, when due to bad quality, products are returned. So there is no discount in that proposition. So where does it sit in the scheme of remission there? Because that's a major issue with regard to the existing VAT.
Yeah, but Sridhar, that's a critical issue, as you said, for food. It's a critical issue for clothing. It's a critical issue for footwear, and it is a critical issue in the gems and jewelry, because all of these suffer from a post-assessment return scenario, and this is too large a segment to be able to ignore.
Yeah, Gautam bhai, PVS before the beginning of the hangout mentioned that services that would be moving from a national to a statewide tax. One of them is a sector also that you represent, Gautam bhai. Telecom, airline, IT services. We are moving from national to statewide taxation. What will be the impact, Gautam bhai? And surely you all would have preferred a national tax, absolutely no doubt about it. What is the industry readiness, your sector's readiness, Gautam bhai, for this transition?
Arun, may I just supplement your question for Gautam bhai? Sure. Gautam bhai, this concept in terms of place of supply, IGST we have something, we have nothing corresponding in C or S GST, and this whole situation of proportionality where supply is in more than one state, whether we see telecom or even if we see a contract of carriage of goods, where there is a fixed amount, but let's say goods traverse through 3 states, how do you see practically this is going to be implementable?
No, Rohan, I thought that's where we would have come back to you to try and interpret this for us, and not the other way around. But yeah, it's a real tough one for services. And I think the greater one will be when you come to financial services. Take, for example, if you give a loan to a client and if that's going to be taxable, if GST is going to be charged on the interest component, if financial services are not going to be exempted, and currently there doesn't seem to be anything to suggest that they will be outside the net. And he uses it in 5 different units, the money, and they are in 5 different states. Where are you really going to charge? Where is the consumption? Or take telecom, as you said. Take roaming, take non-roaming, take the fact that the billing address and the actual delivery address for those services are all bound to be different. So these are areas which, you will need for each industry a set of rules designed for that industry, separately notified. And I think once you do that, yes, it's not going to satisfy everybody, but it will work. And coming back, therefore, around to the question you go making, until those rules come up, there's no question of being ready. You can only be ready with your software and your technology. When you know the rules, you know where you're going to pay. If I'm going to pay in one state, there will be a complete different readiness from if I'm going to pay in 22 states. So that is something which is down the road.
Yeah. PVS sir, you want to add to that, sir? Sridhar sir, then PVS sir may want to add to that. Yeah.
I may add in the context of an IT company rather than a telecom company, because I can possibly relate to IT companies more readily. Again, it is like this. Earlier, a large IT contract with any customer, it was possible to raise a single invoice because it was a contract between 2 parties and service tax was a national tax. Now the same IT services will have to be spread into individual states. Assuming, I'll take an example. If I were to implement a core banking system for State Bank of India, which has, say, branches in all the states, earlier it was possible for me to raise one single invoice on State Bank headquarters at Mumbai. Now possibly there is a need to value the individual services in each state and make a supply to each of the states. Now that becomes a very onerous task. If I don't do it, I may have difficulties in finding out the input tax credits which may lie in various states, and how do I aggregate them into a common place. So either it's a challenge of valuation or it's a challenge of input tax credit, and it is a challenge at both ends. It will be a challenge for the supplier as well as for the receiver of services.
Yeah, I request my colleague Aditya, he wants to put a question to Sridhar sir. Aditya?
Good afternoon, sir. So my question is regarding the transitional provisions regarding credit, carrying forward of credit. So I just wanted to know what will happen for goods which are, say, in transit or which are still in work in progress. What happens to the credit of those goods? Will you get credit in in the GST regime as well?
Yeah, they have provided a lot of provisions. You must give credit. One where the return is filed and there is a carried forward of the credit, and where a return is not filed, there are a separate set of provisions. But the only conditionality is credit should be eligible under the old provisions and the new provisions. Then you will get them. It is there. Okay. I can even read out the exact provision. But what I wanted to make to Giri was another point which I felt, we should not begin with an element of suspicion, Giri. I want to raise one point because Gautam Bhai is there and Rohan is there. I want you to take a very close look at section 10, power to grant exemption, subsection 3. Okay. Here it says the government, either the center or the state, shall be entitled to clarify the rampant extent of a notification within 1 year from the date of that notification. And if such a clarification is being given, it would tend to have effect from the first day. Now, it's like saying, even before I start a relationship with the stakeholder, I go into a suspicion mode. If you wanted to clarify, why wait for a year and then start this whole issue? And 12 months is 12 months to an industrialist.
Sure, absolutely, sir. Sridhar sir, we are running short of time. Rohan, by quick take on that one, you have in the newspapers at least have gone with this headline saying that 5 years jail term for tax evasion, in the GST regime. Is it too strict? PVS sir mentioned to me this morning, and it was an early morning 7 a.m. call, and PVS sir said you should not have jail term for any economic offense. Rohan bhai, your take.
Yeah, so I completely agree. I believe this is an economic offense. It has effectively an economic consequence, and it is completely retributable. So therefore, when you talk of a jail term, essentially you talk of life and liberty, and that is something that you only effectively look at when you're talking of serious criminal offenses. Given that this is essentially only economic and is capable of being made up through the factor of fines and interest and penalties, I think that is so. You will have the outliers in some exemplary situation of tax evasion, but you will see in many developed economies, even for that, the most severe form of tax fraud, they will not effectively go in for the purposes of a jail sentence. It is therefore, to my mind, not wise to have jail terms. Second, and more importantly, you have to ensure that the administration of that is in the most exceptional of exceptional circumstances. So you have jail terms for tax fraud, for example, in the US, but if you see in the last 15 years, that has actually been used 4 to 5 times. So the fact that every time you come close to 31st March, you pick up 2 people and put them away to scare the whole of the industry, that certainly cannot be the approach. So
Yeah, I think Make My Trip found that out.
A much more responsible administration of that provision.
Yeah. Perfect. Yeah. Aditya wants to put a question to PVS. We are really running short of time. PVS, a short reply would be appreciated.
So a quick question. It was regarding the credit availment provisions. They say that the law says that credit can be taken by the recipient only upon payment by the supplier. Is that a little bit stringent provision, or you feel that this is a way to go? This is the right?
It's a revenue protection mechanism. I have only one disconnect, if I have to say. While this can remain, but the point of taxation is at the earliest point of supply, where there are many events defined. But the point of availing credit is dependent on whether the supplier has paid it or not. How do we reconcile these two events? What is the mechanism that trade and industry will have to find out whether a supplier has actually paid or not? I think that is going to be a very, very difficult affair. So while the law has been envisaged with a revenue protection mind, we do not know what are the administrative consequences which will fall out of that.
Yeah. PVS, again, last question to you, and then we'll take closing comments from each one of the panelists. Concerns, I'll read from the Indian Express article. Concerns flagged by Tamil Nadu at Tuesday's meeting include the potential revenue loss for states and the issue of loss of fiscal autonomy after the transition to GST. The Punjab Finance Minister said issues like compensatory mechanism for GST and dual control will continue to be deliberated. Quick take, PVS sir, how would you assuage Tamil Nadu's concerns?
See, GST is a give away from and take some. That's the way it has been given to every player. In fact, it is so for government, it is so for industry, and so on and so forth. The states get a power to taxation of services which was not there, and that is a big uptick, if I can say. In the process, they give away some of the taxation rights of goods and even maybe the ability to fix the rates. The physical power would involve what's called the design and ability to administer. The design ability is somewhat lost, but the ability to administer still not lost. So I think the objections of Tamil Nadu are capable of being handled by the central government by explaining that nothing is lost, everything is still intact. As far as the production state versus consumption state, Tamil Nadu has a good economic reason to object it. But again, if there's a loss compensation for 5 years, what else the central government can do? I think the government has come on board to do whatever it can.
Closing comments, starting with Sridhar sir, then Rohan bhai, then Gautam bhai.
Great effort. I think we need to appreciate what has gone in. Certain few points, as we mentioned, mainly, I mean, I would go back to what we said earlier with regard to area-based exemptions and industrial incentives, which is going to be a kind of it's going to be a cracker fire if this were to attract the attention of the industry. That needs to be bought in, as well as Gautam bhai correctly said, rules. Rules are very important, because even if you look at transportation, there are a lot of issues around the rules with regard to places.
Always in the fine print. Rohan bhai.
So again, as I said before, very, very worthy effort. It's taken a lot of work, and it's probably the most definitive sign that we are moving towards the GST and the introduction of the GST. I think there are a few wrinkles there which color the sentiment in terms of tax administration versus assessee. Like the refund provisions are getting onerous. If you have a pending demand in terms of tax or interest or penalties, you may not get your refund. It will be set off. The whole situation in terms of arrest. So I think if some of these issues can be worked on, and the tax administration simplification can be worked on in whatever we see from here, I think it would be a huge positive. But in itself, let's not lose the very, very significant message that it is definitely game on in terms of GST. Definitely.
Gautam, my final word is always with you.
I would fully endorse what Rohan said, slightly differently. Basically, therefore, a great move. But the whole point is the entire drafting is great. It's a good, positive step forward. We are on to GST. But the approach continues to be one of look after every possible interest of revenue. Don't even take a 1% risk. Earliest point of supply, you make it tax. Don't give credit unless the payment to the supplier has been made. Charge penalties and so on. And I think that is not the way a simple law can be achieved. Revenue must be willing to take some risks. And yes, look after their own enforcement machinery to make sure that they will be able to enforce that law. But to try and make a law which gives absolutely zero risk to revenue and puts the entire burden on the assessor, or take, for example, the tax collection for e-commerce, posing on greater part of even revenues burden to the assessor, is not something which should be the underlying spirit. So to that extent, I think the law needs a relook on the underlying spirit. Otherwise, overall, a fantastic effort. Yeah. So, hello. Hello.
Yeah, we are able to hear Gautam Bhai.
Yeah, I think Arun is gone silent suddenly.
Suddenly. Okay. Could, I think that part has gone mute. Maybe Arun's.
Yeah, sorry, Gautam bhai. We lost you for the last 1 minute. In fact, our connection was bad. Anyway, thank you so much. I think the last 40 minutes have been just riveting. Anyone who doesn't have the time to read the 200-page GST model law may actually not read it. He just needs to watch this 40-minute hangout. Quick, last 5 seconds, Aditya.
Excellent approach. We hope that the constitution amendment bill comes through in the monsoon session, and we do see April 1 as the day for GST.
Yeah, constitutional amendment bill. My last comment. It will be race 4. We'll probably have multiple rounds of ballot counting in the Rajya Sabha. Thank you so much, everyone. Thank you so much.
Thank you.
Thank you.